Yeah. No, well said with that. And I always tell my students early on in the course, I said, look, it says a stable coin, it says USD something, but let's just be clear. It's not like a dollar bill in your hand. It's not like a dollar in a bank account in America that's guaranteed by the FDIC. It's not backed by the full faith and credit of the United States. It's ultimately still on a blockchain. Yeah, it might be collateralized with a layer, with one US Treasury, but that doesn't mean it's going to be there when you need it. So again, that's probably why you're getting a higher yield for it as well. So just be aware, as they say on Wall Street, there's no free lunch. If you're getting a return, you're going to probably be paying for it in some type of risk. Again, UST, you're getting 19% returns on that. In retrospect, maybe there was a little more risk there. So yeah, you're right. If you don't need to take the risk, don't take the risk. It's probably a good thought there.
Yeah, exactly. And then just a little segue.
Yeah.
I was perusing the YouTube channels and I saw your great video yesterday about options. You were at MIT. We talked about this off camera. So I had heard that you had a DeFi Academy. And I was like, okay, well, I don't know what that all is about. And then we were talking about another YouTuber who was lambasting you about why would you even listen to Brian Rose or Wolf of Wall Street because da-da-da-da-da. And I was like, yeah, why would we listen to Brian Rose? And so I was listening to this video. I had no idea that you were for Wall Street for 15 years in derivatives, making all those huge trades and doing a lot of risky type of plays, but also protecting assets. So like when I take a look at these videos, I think it's the same thing as like research on crypto. Like you have to find the nuances, right? Yes, you go to Brian and Brian will probably tell you, buy Bitcoin, Ethereum. But since he has that experience with trading all these derivatives and the different risky aspects, these are the things I don't talk about because that's not my lane. But I think there's people out there that probably want to learn about that. And those are the nuances that I think that people don't understand, especially about risk assessment and using options and calls on things. I mean, some do, but some get just horrible advice. So why don't we get some good advice from somebody who's already been there and knows all the tricks of Wall Street, which would be Brian Rose.
I appreciate you saying that. Last year we went heavy into crypto and DeFi and all these things. And I started using and reusing 15 years of my life that I'd kind of locked away for a while. And I actually had some amazing experiences. I was 21 years old, 1993. I sat on a desk at a company called Bankers Trust that actually, strangely enough, Dan Tapiero from 10T Holdings was there and Dan Moorhead from Patera Capital was right in the same room. And I didn't know them then, but they were right there. And I was trading a massive derivatives book for a big bank, and I got to understand what risk was. I got to see traders and how they executed stop losses. Our P&L was every day, bounced around the world globally, so there was a lot of transparency. I got to learn about how to get out of positions, how to play derivatives positions. I traded a lot of U.S. government bonds, like a lot, bond futures, mercantile futures, and then went into credit derivatives as well. So yeah, I quite a lot of experience there. And I always bothered me that derivatives got a bad name. Derivatives is not what caused the housing crisis. Bad risk management is what causes all the crises. And the derivatives, I've had a lot of people on my show talk about a lot of things. One of the things they talk about is drugs aren't bad. The misuse of drugs are bad. Drugs are just chemicals. And the same with derivatives. They are just instruments for transferring risk and for getting different risk appetites. As humans, we've been using derivatives since the beginning of time. And so what I try to do with my students in my courses is just say, look, this is a call option, one of the most basic forms of derivatives. This is how it works. It gives you leverage and you sacrifice a premium and you sacrifice an amount of time you have to exercise something. But we buy and sell options between each other as humans all the time. Hey, do you want to come to my party on Friday night? You can come if you want. That's a call option to go to their party. You can also not show up. So we have them all the time, My kids have a put option to probably move back home one day if they ever screw up in their life. So that's a put option that I'm short on my kids. So we're actually constantly trading those options. We just don't always value them and price them in the right way. So I just get my students to go through one transaction. And so that was that video. I was at MIT a couple months ago and I was at one of the whiteboards and I just drew it out. So yeah, I just try to bring some of my experience to this table. But as I tell my students, look, options, I just want you to understand it. You can get in plenty of trouble with the volatility just in crypto. So it's not something you want to use, but I think it's one of the building blocks of finance. So yeah, that's kind of why we jump into it.
Yeah, and to me, it made a lot of sense because people, when you get into investing, you don't really, sometimes you don't think about the risk, and this is one of those problems that I get DMs and emails all day long about, hey, I have all my money in Celsius, or hey, I had all my money in Terra Luna, and I can't retire now. Now I have to work another 10 years, and I'm like, what? Which part of that is the smarter option? Did you, in the beginning, should you have done that? No, you shouldn't have done that. Did you understand the risk that was involved? Well, not really. And I think with these types of things like academies and stuff that are out there, that if people don't realize this now, they're going to learn the hard way. So you can learn from mistakes. They just don't have to be your mistakes, and just go from there.